We've been touching on the regional banks once again this morning. PacWest, for example, continuing its climb, its rebound that we have been seeing after announcing the sale of some real estate yesterday. And broadly, we've been seeing those regional banks rebound. Let's bring Jens Nordvig back into the conversation, founder and CEO of Exante and market reader. Jens, you were just saying how you were screening hundreds of banks after the collapse of Silicon Valley Bank. You were flagged at First Republic. What's the screen showing you right now? Are there still other trouble spots, or have things really calmed down?
I think when we are screening the banking sector, not just today, but like over the last couple of weeks, what you're seeing is that we're moving in these waves where all the different banks move very similarly. You know, lots of banks moving 2-3% without a heck of a lot of news. And then you can go and check at the volume indicators, right? That there's actually a lot of volume. So this is like a typical short covering dynamic that we've been through, where it doesn't really have a lot of micro differentiation, but the whole sector is moving in tandem. That's been a dynamic over the last, I would say, 2-3 weeks. And I would also say, like, the question I'm getting from clients is, okay, if we have another leg down, another piece of bad news, like, is it going to feed into all the other asset markets in the same way? I don't think so. I think like, these links are always very nonlinear, right? They work in a certain way for a period of time. And I don't think if there's one small bank that is having some negative headlines, I don't think it's going to have the same spillover into the rest of the sector again. Like, I think we've started to see some kind of decoupling. Like, there's actually a group of regional banks, the big ones, Fifth Third and so forth, right, that have started to trade much more resiliently. And now we've had this lower end, some of the smaller ones that have also bounced back. But I think it's a more healthy situation you're looking at. We still have to watch the deposits, but the price action is looking like we're heading to a more stable period to me.
Following the event, what has your screener told you about financial conditions and how much that has started to tighten?
Yeah, so that's the big question that the Fed is obviously asking that question as well. And you can see it from some of the Fed speeches, right? Some people say, okay, what has happened in the banking system is worth several hikes. But estimating that with any precision is very hard. And the Fed is going to be very cautious in terms of making that determination until they've really seen some deterioration in the data, right? So when you look at the actual data from the US banking system, we can track that every week. And you have to be very careful, right? Because when there's a bank that drops out or some loan portfolio that gets sold, we have volatility in the data. And people, we had early in the crisis, like, some people kind of freaked out, oh, it's dropping, but it was just because the data was distorted. If you take those distortions out, actually lending in the US banking system is relatively stable. You cannot see a big impact from this shock yet, I think, to quite a few people's surprise. Until you can see that trend really rolling over in the data, I think the Fed is going to be watching it, but not really setting interest rates in a way that's dominated by that force. And I think that's exactly what you're seeing now, right? We had cuts priced, we talked about it. And as long as that lending dynamic is not deteriorating sharply, we're actually going to move back to essentially the economics dominating what the Fed is going to do, as opposed to this banking tension.
Interesting. Jens, it's great to see you. Thanks for coming in. Appreciate it. We'll see you again soon. Jens Nordvig of Exante Data and Market Reader.